let's look at Chegg. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So this is the megatrend called Education 2.0. The average performance is slightly outperforming the S&P 500, but we have seen a very substantial crackdown, especially from China, because they have been rather hostile towards these kinds of companies. So here is Chegg in the educational services business, basically at the 52-week low, and we have seen almost minus 47% pullback, which is obviously pretty significant. Master your courses, stay ahead with guided 24/7 expert support and tools customized to each of your courses. Yeah. Test prep simplified, expert by your side, professional proofreading. And these are definitively very, very valuable services for, the people who are, studying. So homework help, exam prep and practice, help understanding topics. Okay, so let's just jump into the charts here. I did find some time cycles here. You could, argue that we have seen some smaller cycles within these major ones as well. So let's draw them in. So in this instance, you had 1 and a 2 and a 3, which formed essentially a head and shoulders pattern that didn't play itself out. Because the paradox of the head and shoulders is that you do have, a bunch of support at, the neckline. And in this instance, you have a 1 and a 2 and a 3. But here we are seeing a bit of a breakdown. So there is deterioration. The blue 100-week moving average was a very key support level for quite some time. But we have now, in a very ugly way, broken through that support. And we did definitively see an acceleration here in the selling pressure. So from a technical standpoint, the bears are in control, but you could start to make the case that maybe the bears have pushed it a bit far as well. Meaning that this is not an ideal time to put on a bearish position. So here are the daily data points. Obviously the bears have done a lot of damage. When we look at these additional indicators, that's when it gets a bit more interesting, and the reason why it popped up on my radar. So as far as the MACD goes, we have an extreme, unprecedented bearish situation, but maybe it's so bearish that it's excessive. When we look here at, the RSI, so this is weekly RSI, and you see that the previous time we reached the current level was here, and that formed, this major low. Before that, you go back here, also formed a major low. Then you have this plunge, formed a major low, but that was actually a bit higher than the current level. And if we go even further back, you have this, super depressed period, and that did result eventually in a very spectacular rally. So from this low here to this high, 2,574%, which obviously is pretty darn good. When we look here at the PPO, the distance from the purple 20-week moving average and the green 50-week moving average, we are at a low that previously, especially vis-a-vis the 20-week moving average, it has been bought in the past. When we go to the daily data point, we have extreme readings here on the RSI. The previous times we were this low, it formed this key low on the RSI and also price action and resulted in a big rally. Looking at the distance here from the purple 20-day moving, so now we are at the daily data points, 20-day moving average, 50-day moving average, blue 100-day moving average, and also the red 200-day moving average. We are at lows that have been bullish, contrarianly bullish in the past. Here we have statistical correlations, weekly data points between the Chegg and the S&P 500, 81-ish% positive. Then you have 62% positive here with the China ETF. We don't have any data on the educational technology, the education ETF. And we have a minus 3% negative correlation with the dollar index. When we go to the daily data points, minus 37% negative with the S&P 500. An interesting, big difference here, 54% or 55% positive correlation with the China ETF, and only 64% positive here with the education ETF. And then minus 27% here with the dollar index. So when we look here at the seasonality for Chegg, over the last 5 years, November, December, January, and February have been very strong, and that is definitively bullish. Over the last 9 years, then you do see that November is one of the strongest months. December is also pretty decent, so the seasonality here pushes me in a bit more of a bullish direction. You see this trend line here on Finviz, so we are pretty close to it within this trend channel. So just a reversion back here to the upper end of the channel would be a pretty nice bullish move. Looking here at the price targets vis-a-vis the current stock price, they are all substantially higher. If you look at in the FBN securities price target, they imply a 71% upside, which obviously is very bullish. SAX, number 3 hold, D value, but we have a B growth and A momentum, so the style scores are pretty good. The industry rank here is very unspecific. They just call it internet software. I think this is way more specific. Market cap approaching $9 billion. There is no dividend. Yeah, I think that this is definitively a very, very interesting company at this point. It is all about, buying low and selling high. And I think that from a technical perspective, the history was very interesting. These levels have a tendency to attract bulls. So the technicals do lean me bullish. The seasonality had some bullish takes. And, you also have, the fundamentals were definitively bullish when you both look at the price targets and SAX. So yeah, I think that, from a risk-reward perspective, this one is interesting from a more bullish take. But that is more initially as a trade. As far as the longer-term picture, we need to just take it one day and 1 week at a time, because initially here I'm just leaning more towards a bounce. And always remember that all big moves, they start small.